we had a question roll in, kind of our mailbag. And it was along the topic of how do I trade? Let me just read it. It says, when the volatility spikes in the market, is there a way we can take advantage of that and hedge our position? So I wanted to start with that and then kind of work backwards into some of the adjustments you made Thursday. I know you closed down a money press or two, closed out a couple positions. And I mean, looking back, you're like, wow, Preston just timed the market perfectly. But maybe you could speak and we could have a quick discussion on that topic of, right, some volatility hits,
Yeah.
how you kind of be prepared for that, and some of the thinking that went into some of those adjustments that you made that looked like they were just perfectly timed.
Well, the freshest one that I was just looking at actually was on Mongo, MDB, Mary David Boy. I know I'm not doing the right military phonetics there, but it was in a money press on this one. And we can just see how it just started covering lots of ground just recently.
Made that run up.
And it covers so much ground, just kind of, and this was a money press strategy. And I'm talking about just the last, now we're
2 weeks.
seeing, yeah, Monday. I think it's up today. MD, we can't really tell here, but I think it's up. It's up today.
Yeah, it's
But
bouncing back a little.
up $6, $7. I see. I see. But this past week, I decided not to sell a weekly put, and it's just because sometimes you're in it, the stock just kind of leaves the station. Well, normally just don't. Stocks can do whatever they want, but when they leave and just kind of leave the station, when I mean leave the station, I mean they just start going like a bottle rocket and
Hmm.
leaving your little parameter of your money press. I decided not to sell. And on this one, I only sold half of the potential that I could sell. If you have a 10 contract money press and sell 5 contracts for the week, that's selling half, right?
Right.
Which means, and what happened here is the stock came back with some profit taking. And it's
Hmm.
almost like I was so glad the stock dropped 17, $18 a share. If your neighbor overheard you, rooting for a stock to go down, they think you've gone, gone to the funny farm and back. But it comes back to you, and the nice thing is, you just in a money press, you just make more money that way. You're not chasing it.
Yeah. So if you're newer to the money press, it's a strategy where we're selling a weekly put and it's really bullish to neutral. If the stock goes sideways or up, we can make some good money. So what Preston's saying is once in a while you get a stock that just really explodes to the upside. And a lot of times when that happens, it needs a little breather. So just by not selling the weekly put, we're hanging on to the other side of the money press, which is a long put. So we're flipping the trade from bullish to neutral to really more like neutral to bearish. And so you can make these really quick as individual investors. We can pivot in a click of the mouse and take a position from bullish to neutral to bearish just like that. And so Preston, just having some instinct, but seeing the stock really covering some ground, he just said, hey, I'm going to wait a little bit here. And sure enough, it turned out to be a really great move. And then another one, Preston, you had a money press on HIMS, HIMS, and that one you decided to close down on Thursday. So maybe you could talk through just some of that thinking. And again, Friday hit and you didn't have any exposure to downside. You kind of closed that one out. And again, in both of these cases, you'd really limited that exposure to a market drop.
Yeah, like you said, it's the flexibility of something like the money press, meaning exactly what you just said. If you sell a weekly put, you are neutral. You have a neutral to bullish position. The stock hangs out sideways, you make the full amount of money. If it goes higher, you make the full amount of money. And even if it goes lower by less than what the premium that you took in, I mean, think about this. You make money. There's 3 ways a stock can go: up, sideways, and down. And I love a situation where you can make money on two kind of plus out of those three. I mean, sign me up for that.
Right.
But there's times where, like you just said, if the stock is too bullish, we can enter a week where if you don't sell the weekly put, you're left with a bearish position. And if the stock just has profit taking and just stops being so white hot and actually sits back down, which is what stocks do a lot of the time, you can craft a week or two where um, it actually benefits you for the stock to drop. I mean, it's just hard to
Right.
explain, but the strategy can be that versatile. And that just happened to work out really good last week for both of those names.